Today, I'm going to be talking broadly about the opportunities and challenges of using technology for tax administration and making specific applications to the ongoing COVID-19 pandemic. And if we just take a step back and think about how COVID-19 is revealing how much technology has transformed different facets of our lives. So imagine COVID-19 had happened 20 years ago. It's very unlikely we'll be having a virtual conference here with people all over the world speaking on Zoom. So much has happened in terms of the technological development over the last 2 decades, in fact, that has made it possible for us to be able to cope to the extent that we can today. And so we can think of e-learning or e-commerce, or most importantly, as we'll be discussing today, e-governance and the way government delivers services. And this is not just in taxes. So there are examples across different aspects of governance of how being able to use technology improves service delivery to citizens, as well as helps to curb different leakages and opportunities for corruption. Today, we're going to be speaking specifically on technologies used for tax administration. And this is something that has grown a lot over the last, even I feel like it's an accelerating growth. So I started working in this field about a decade ago, and the landscape is so much different now. And this is only set to increase further post-COVID with more socially distant taxation, just like the commissioner was mentioning about how things accelerated once COVID hit. And if we now move to a socially distant taxation world, how is it that we're going to be able to use these different advancements in technology? And I think the other key point is that there's a lot of enthusiasm around the potential of digitization. And so what I'm going to be discussing today is trying to think about how, to what extent this potential is realized and how we can try and maximize its impact. So this is going to be a slightly different talk from your typical academic presentation, because I'm going to be talking about 3 papers instead of 1. I'm going to be doing 5 minutes on each of them. And so the links will be available if you would like to go in depth in any of them. First, I'll be presenting an overview of this literature. It's a recent work with Fabrizio Santoro, who's also on this conference, and giving key lessons that we see looking across different contexts and different types of technology. Then I'm going to be doing 2 deep dives into specific applications of technology in tax administration, drawing out lessons on what the promise is and what the challenges are. So the first one is on real estate taxes in Liberia, and the second one is on e-filing of taxes in Tajikistan. And the key message that I will deliver today is that yes, indeed, technology can help with administering taxes in 3 of the core duties of any tax administration. 1 is helping it to define compliance, to determine what exactly needs to be taxed, what is the tax base. 2 is to facilitate compliance, making it easier for people to pay or making it easier to provide no service to them. And 3 is to monitor compliance, to detect evasion when it occurs. Very importantly, I'll be also highlighting the fact that technology is not a silver bullet, and that its impact is going to depend on other dimensions of tax capacity, such as the enforcement capacity on ground, and that it does create winners and losers. And one needs to watch out for how losers may be acting strategically to undermine the impact. So diving into the first paper, here we're looking at 3 core functions of any tax administration and how technology can help with them. So the first one is to understand the tax base, to define what compliance looks like. 2 is to simplify processes by facilitating people's process of complying. And 3 is to monitor compliance by detecting evasion when it occurs. And what do I mean by defining compliance? So you could have IT-enabled systems that help with creating completely new databases, for instance, a taxpayer database or a property registration database, or to capture transactions as they're occurring. So for instance, you could have electronic billing machines such that as people are checking out in the store and paying, that information is immediately being sent over to the tax authority so that they have access to know what exactly the firm is earning. And finally, it could be by not creating these new databases, but by linking existing databases. And in all of these things, the idea is that government tax administrations need third-party information. They need ways of knowing what exactly is a taxable transaction or process that is going on. So you can imagine a situation where the tax administration is building a profile for a taxpayer by using different sources. So it could be an employer reporting the wages that the person earns through what's in the US as a W-2, but every country has their equivalent of it. Or clients reporting what they paid as a contract payment. You could have electricity companies reporting how much the company is using as a proxy for their production. You could have things like electronic sales registers that I just described, or through VAT, the firms are reporting. You get the picture. Through all the sources of information, a tax authority can piece together what the tax liability of a firm is. Second is to facilitate compliance. And this is making it extremely easy for people so that, as the commissioner was saying, they don't need to come to the tax office to get information, to ask for advice. It starts from things that are as clear as a very good website that gives clear information on what needs to happen. And in many countries, people find email and reminders useful for people not to miss deadlines. And one of the things I'll be discussing today is e-filing, to see how you can help people, instead of having to go to an office and line up and go from one office to the other, let filing be a non-event. And third is, lastly, is this idea of a pre-filled return. Again, very well described by the commissioner, where people just, through the third-party information that has been gathered, people can look and see, do I agree? Yes, and that's it. And the goal is an easy and transparent process that does not require any personalized interaction with the tax authority. And we actually find that this tends to have two dual effects. One is, yes, on the side of the taxpayers, it reduces their compliance costs, but then it also reduces opportunities for corruption or harassment. The third core function is to monitor compliance. And so we have IT for doing automatic regular cross-checks of self-reported liability with other data sources, and also using all the data that's collected to build risk profiles for taxpayers so that we can identify who is more likely to be evading. So it could range from simple processes to sophisticated machine learning methods. Now, moving on to the limitations. The first thing is infrastructure and connectivity. Having the right hardware connectivity in the tax authority, but also among taxpayers. And this is important in thinking about what level of access different types of taxpayers have. So, for instance, one example from Rwanda is that there was an e-filing system, but they realized that many people actually use mobile phones so non-smartphones. And so then there was a alternative M-declaration where you could use a mobile phone to report. The second, which I really want to emphasize, is thinking about the human factor, because at the end of the day, technology is a tool that's only as good as the users. So on the side of taxpayers, there might be a need for certain training of subsidies to adopt technology. We want to make it as easy as possible for them. On the side of tax officials, we need the right skills and training for them to use it appropriately, as well as the right incentives, because you do find situations where very easily, even tax officials might try to sabotage IT efforts and try to move around them. There's an interesting paper from Madagascar by World Bank colleagues exactly on this. As soon as a new system is introduced, taxpayers might try to circumvent it to get around it. And then thinking of it as an institutional strategy such that we're not just having an IT department off on one side trying to implement this technology, but integrating it such that there is a proper sequencing of which technology is introduced first before another, and having redefined roles for all staff. So imagine people whose full-time job was receiving tax reports. Now they need to be integrated in new places in the organization. And then fourth, what very importantly is this sense of things that are beyond even just what technology can do for you, but more in the regulatory environment, such as enforcement and timely prosecution of evaders. There is not much benefit by having all the best reporting and third-party information and risk profiling if at the end of the day, people cannot be made to face the legal or fiscal consequences for not complying. Okay, so now I'm going to dive into the first of our two examples. And this is a collaboration that I had with the Liberia Revenue Authority on seeing how to improve compliance in real estate. And here, just linking back to the previous framework that I laid, we'll be looking at technology as helping to define compliance, so to identify the tax base here, and also the importance of making sure things are right in the regulatory environment. So the problem that's in this context is that the tax authority had very limited capacity to know what the tax base is on to enforce the tax, because there's no comprehensive cadastre. There's no good listing of all the properties owned, and this results in very, very low rates of compliance. We're thinking like 5% of residential property owners paying the tax. The investment that they had was actually a pretty low cost or low tech investment, which was to train youth from different communities to use open source software on tablets to perform an enumeration of properties. So location, ownership, photo, GPS. And from this, they created a completely new property database. The research design was to use this new information to send payment notices to property owners. And so they were randomly assigned to receive one of 4 different versions of the notice. So the first notice was a plain one that just said, dear property owner, these are the requirements for tax payments, please comply. Then we had one other notice that included information from this new electronic database. So we had a picture of the property in question, as well as the name of the owner, as a way of personalizing it, that we have detected you, we know you're not complying, please comply. The next type of notice had the basic requirements as well as information on legal penalties. And then the 4th type had these 2 elements. So the detection notice, meaning the name and photo, as well as the legal penalties. And what we found was that this treatment that had both what we call the detection information, that the photographs, as well as the penalty information, made a significant difference. So here we have a tripling of the people that came to register their properties. We also had, among those who paid from our control group, moved from 2% to almost 10%. And we also see that in the amounts paid, we find this increase that's not statistically significant because there's this large number of zeros, people who pay nothing at all. And when we transform this with the inverse hyperbolic sign, we find an increase in the tax payments. So that's the impact that I just described. But then what's this outstanding challenge? The challenge is that you would imagine that if people received a notice that had their name, personal, their photo of their property, and told them they had not complied and told them what the compliance was, that you have a much higher response rate than this. But what we find is that over 85% simply did not respond at all. And one of the lessons we'll learn from this is that, yes, we do have this increase from using information from digitization, but that in itself is not sufficient. You also need to couple it with appropriate enforcement capacity. We have a second experiment we do in this same setting, where the tax authority then signals increased enforcements to a subgroup, and among that subgroup, we do see an additional increase. And we can think of this for other applications beyond real estate tax. So anything that gives the tax authority third-party information on transactions is them getting this type of detection information to understand their tax base, but then it must at the same time be coupled with action on that information. The information in itself is not going to get you out of the way. All right, I'm going to do the second dive now, which is an electronic tax filing in Tajikistan. And here we'll be focusing on this role of digital technologies in facilitating compliance. And on the side of the limitations, we'll be looking at how the human factor can step in. So in Tajikistan, the issue was that there were very high compliance costs. Firms had to go every month to the tax office to line up, submit their tax declarations. And so this was both very time consuming for them, but then also led to opportunities for corruption. And the corruption was in 2 ways. One was a collusive type of corruption, where I'm talking with my guy at the tax office who's advising me on what I can do to get around to reduce my tax liabilities. Or it could be more on the harassment side, where I am being held up by the tax official. If I don't report a certain amount, then maybe they will not sign my tax return. And the tax officials had targets on what they needed to collect from different types of taxpayers So this was something we found from focus groups. The intervention here was allowing firms to start to file online, to develop the e-filing system to reduce this in-person interactions. The research design was to provide a randomly selected group of firms e-filing training and logistical help for them to complete what was a complex e-filing registration process. And we find that this increased e-filing use by those firms. And in terms of the baseline firm characteristics, we use this to try to predict how e-filing might affect firms. So for instance, we think that firms' costs and benefits from moving to e-filing would depend on what their baseline relationship was with tax collectors. If they were in a collusive equilibrium, then moving them away to e-filing might actually disrupt this, and they might think of it as a negative. But if they were being harassed by tax collectors and trying to avoid those interactions, then maybe it would be beneficial for them. And so to distinguish between these two typologies of firms, we use the risk score of the firms, which is something that the tax authority developed to predict which types of firms to be more likely to be evading. So this is the experiment design in this setting, where our control group gets a general training on taxation. Our e-filing training group gets the general taxation plus information on how to use the e-filing system. And then the third group, in addition, gets logistical help for registration. Because like I said, it was a difficult system. You had to submit lots of documents in advance. And then 2 weeks later, you get an approval. And then someone comes to your office to install the e-filing system. What we find is that the joint intervention that gives the training and the logistical help significantly increases the likelihood that people start to e-file. And it's this difference between this group of 93% e-filers to these other two groups of about 60% that we use to identify the impact of e-filing. So what we find is that e-filing reduces compliance costs. People spend about 5 fewer hours each month on complying with tax obligations. And this is about 40% of the time that the average person spent on taxes. It also reduced bribes, which we measure using a list experiment, but this is only among low-risk score firms, meaning the firms that were less likely to have been colluding. So being away from the tax office actually helped them. And then we find that it increased revenue. So among our high-risk score firms, meaning those who are more likely to have been evading, e-filing actually doubled the tax revenues. And so the challenge that we see here is that the high-risk score firms on whom it had the greatest impact, they're actually less likely to adopt e-filing. So they are less likely to take it up. And even after they take it up, we observe from the data that they're also more likely to drop out and to revert to paper filing. And when they revert, we see that this increase we found on the tax revenues, actually that dissipates once that happens. And so the policy lessons from this study is that, yes, technology can not only reduce compliance costs, but it could also increase tax revenue and reduce corruption. And this we can think of as being relevant to any other type of technology that's helping to reduce in-person interactions with tax officials. And when adoption is voluntary, then we have to be careful because users may respond very strategically. Those for whom the technology may impose the greatest constraints may then also be the less likely to adopt. So to conclude, from these 3 studies, the government, yes, can mobilize tax revenues by using it to define compliance, to understand the tax base, to facilitate compliance, to make it easy for people to pay, and to monitor compliance to detect evasion when it occurs. Technology, however, is not the silver bullet that will solve all the problems. And I really emphasize the fact that you need this investment in people as well as institutions such as the enforcement capacity to reap the benefits. In addition, we have to think about how different subgroups of users may be affected and how they might likely respond to this technology that's been introduced. And the final thing to note, given that we do have many policymakers here, is just the exciting new possibilities that we have from the large amounts of data that using these new technology tools, what they provide. And so these opportunities where researchers and practitioners can collaborate to gain insights from data that can be then used for improving policymaking. So thank you again for the invitation and look forward to your comments.
Thank you, Oyebola. Thank you very much. Very, very interesting, presentation. detailing some of the findings that emerged from your own work, which is fascinating to listen to. I would like now give the floor to the discussant of this paper. The discussant is Andrea Komso from the IMF. The floor is yours.
Good morning, good afternoon to everyone. Thank you very much for sharing with us a very interesting research paper and two case studies, which indeed tells a lot that it's possible to improve compliance, increase revenue collection in also low and medium income countries and not just in advanced economies through proper application of technology interventions. I just want to comment provide a few remarks on your paper and also your cases. I was lucky to have opportunity to work also in Africa, for example, in Liberia. But before this project was implemented, and also I'm coming from advanced economy, meaning that difference between the level of application of technology and use of technology to improve compliance, to mobilize revenue is a little bit different, but it doesn't mean that in low-income countries there are no approaches which really can and significantly in a very quick way also contribute to improved compliance and increased revenue collected. And I will not touch any of your aspects which you presented, which are most focused on a kind of digitalization of tax administration core business, like fulfilling of core tax administration compliance through e-filing instead of paper filing, person to person filing. E-filing usually coupled with e-payments, which is in many jurisdictions well welcomed, but not well implemented. Or some other technology-enabled services like implementation of electronic fiscal devices, registration or any kind of compliance actions based on third-party data collected from government resources, government registries, or some other stakeholders like financial organizations or directly through a channel of a network of taxpayers. But I would like to focus a little bit on aspect of transformation. When we are talking about transformation, it's necessary to consider enablers of transformation. Most of low-income countries face different challenges which are related to inadequate infrastructure and internet connectivity. However, mobile interconnectivity significantly improved during last years. It's still a potential issue. And in some cases, there is in general lack of, or indeed resistance, lack of adoption of new technology, new processes, new methods of doing business. One of bigger challenge, which I think is lack of institutional clear transformation strategy, which is elevated to the level of government, not just to the level of Ministry of Finance or Revenue Authority, because clear institutional transformation strategy should cover other enablers, which are digital identity, data privacy, different kinds of security, including cyber security, and the overall information architecture of state or of country, which part is just revenue authority. And policy decision makers are the one who can impact and absolutely trigger needs for adoption of changes at the level of government, and have adopted model of whole of government approach to improved revenue administration, business process, taxpayers, simplification and improved experience, and of course much better resource use, higher transparency, reduced corruption, and of course, reduced cost of compliance, while on the other hand, collected data, compiled data, digitally processed data can significantly support taxpayer compliance management based on risk analysis, taxpayer segmentation, taxpayer differentiation, and of course, targeted enforcement interventions. So the most important is adequate regulatory framework that will enable indeed preparation of transformation program that will then enable adoption of technology. Otherwise, we can face issue of misuse of technology or mistarget of its adoption. So I would stop at this stage. I think everyone should try to get kind of strong buy-in from key policy makers and key decision makers to be able to move to the next level of digital transformation of revenue administrations. Thank you very much. Thank you.
Thank you, Anya, for offering your views on the presentations, on the papers. Oyebola, would you like to respond quickly to some of the comments made?
Yeah, no, I think her main comment was about the need for going beyond the tax authority, right, to a broader national transformation agenda where things are put in place, data privacy laws, even data sharing laws, and overall ways of facilitating this use of technology to happen so that we avoid misuse, mistargeting. And I have nothing more to say than exactly. I completely agree, and that's completely essential. It's not something it can't be done as a silo, just a tax administration. You need, even for all this third-party information we're talking about, how can I, as the tax authority, speak to the banking industry, any other industries? How do we identify taxpayers? What can we share or can we not share? How do we get information from employers? So it's a broader thing, having a consistent digital ID for people in the country. Those are the foundational building blocks on which all of this can then be built. So I agree completely, and thanks for those comments.
Thank you. I would really like to continue the discussion, but unfortunately we are slightly over time. However, there's a question in the chat box. If you could take a look at that and answer quickly, Oyebola, if you can, that would be great.
It says, what was e-filing, electronic submission? No, okay. No, it was a standard e-filing form. It was a software that was developed. So they made it, the interface was very similar to what the paper interface looked like, because that's what people were used to. But then they could enter the information into the software that way, and it was sent electronically to them. And yes, anybody else that has a question, please feel free to write, and I will try and write a response to you. But thanks again for the
Thank you. What I keep from this discussion is that technology is not a silver bullet, but we need more enablers. And I think this is a very powerful message, which is sometimes it's being misunderstood. Thank you very much. Thank you for joining us.